Hello, good morning, good afternoon, good evening, depending on where you are watching from at this time of the day. My name is Kingsley, and welcome to the Kingsley Gochuku's YouTube channel once again. And today we'll be talking about national income accounting, taking a practice question from the Ican ATS2 study pack on economics. This question reads as follows. They say, given the information below for an economy amounting millions, net income from abroad is given as negative 2.5 in million as stated. Gross domestic product equally 101 million. Indirect taxes or indirect business taxes is given as 10.2. We have consumption of fixed capital given as 17 million. We have company tax given as 1.1 million. We have personal tax given as 1.5 million. We equally have social insurance contribution given as 3.5 million. We have undistributed profit given as 2.6 million. We have transfer payment as 2.4 million. We equally have subsidy as 2.0. We proceed. The question. The requirement is as follows. I said the gross national product, which is the A requirement. The second requirement, they say the net national product, which is the same as saying NNP. Then C, they say the national income. Then D, the personal income, PI. Then E, finally, the personal disposable income. This is the question from Ican ATS2, practice question from Ican ATS2, study pack on economics. So we'll go straight to getting the solution for this particular question. Now, before we get the solution to this question, we'll need to talk on some tips to convert from one form of a national income value to another form. We have the conversion from gross value to net, from gross value to net value, from gross value to net value, conversion from gross value to net value. If we are converting from gross value to net value, the step to take is simply, if for example we are asked to convert from GDP value to NDP value, still the same as saying conversion from its gross form to the net form. So GDP to NDP will simply take the action less depreciation, to convert it from gross form to its net form, less depreciation. Now, apart from depreciation, they can equally call it capital consumption allowance. Is capital consumption allowance. Can equally call it capital consumption allowance. Apart from it being called capital consumption allowance, they can equally call it, according to what we have in the question, they can equally call it the consumption of fixed capital. So it's either depreciation. You can equally call it, aside calling it depreciation, you can equally call it capital consumption allowance. we can equally call it consumption of fixed capital, just as we have in the question, consumption of fixed capital, consumption of fixed capital. So once we less depreciation from the gross form, we arrive at the net form. Once we less depreciation from the gross form, we arrive at the net form. Now, that is simply what we have to do when we are converting from the gross form to the net form. Equally, we can convert from the domestic form to national. The domestic to national, conversion from domestic to national. If we are converting from domestic to national, example, we are converting from gross domestic product to gross national product. If we are converting from gross domestic product to gross national product, all we simply do is add net income from abroad. Net income from abroad. Add net income from abroad. That helps us convert it from the gross form, from the domestic form to the national form. Add net income from abroad. So we'll take that action, adding net income from abroad, to convert it from the domestic form to national. From domestic to national, add net income from abroad. Then we equally have some other actions that we can take and convert from its market price to factor cost. From market price, from the value of items within a country at current market prices, to the value accrued to factors of production. So if you are converting from market price, market price to factor costs. If we are converting from market price to factor cost, we simply take the action less indirect taxes, and add subsidies. So minus indirect taxes plus subsidies. That's what helps us convert from market price to factor cost. If we want to convert it the other way around, from factor cost to market price, we simply do the opposite of what we have here. We'll add indirect taxes and less subsidies. If we are converting from factor cost to market price. But this one, we said market price to factor cost, we'll simply do less indirect taxes and we add subsidies. So with this in mind, we'll go straight to answering the question at hand. The question at hand, the A part simply asked us to get the gross national product. We need to get the gross national product. So we have our solution. The A, say the gross national product. That's what they asked for, gross national product. Meanwhile, in the question we are given gross domestic product. We are given gross domestic product in the question. So we simply work with that information. Gross domestic product plus net income from abroad. Just as we said, if we are converting from domestic to national, since the value we are giving is in its domestic form, we'll add net income from abroad. So the net income from abroad and the value for GDP was clearly given in the question. GDP value was given as 101 million. So we are having 101 million naira. And we have plus net income from abroad, but the net income was clearly in negative form. Net income from abroad was given to us as negative 2.5. Negative 2.5. So if we say plus in bracket of negative 2.5 million, we're having the same thing as saying 101 minus 2.5 million. So 101 minus 2.5 million clearly gives us 101 minus 2.5 million gives us 98.5 million naira. So it gives us 98.5 million. The 98.5 million becomes my gross national product, which answers the A part of the question. Now, the B part of the question says we should get the net national product. The B says net national product. Net national product, which is the same thing as saying NNP. So net national product, NNP. So it simply means conversion from its gross form, since we already have 98.5 million from the value we had before. 98.5 million in its gross form, we need to convert to the net form, and we said we are going to less depreciation from the gross form in order to arrive at the net value. We'll less depreciation, but in the question it was not stated as depreciation, it was stated as consumption of fixed capital. So it's still the same thing as our depreciation, consumption of fixed capital. So simply what we have is GNP minus consumption of fixed capital. So GNP minus consumption of fixed capital. So our GNP value, as we've computed, is 98.5 million minus our consumption of fixed capital is 17 million as given in the question. 17 million as given in the question. So it clearly gives us 98.5 minus 17 gives us 81.5 million. So we have 81.5 million. 81.5 million. So 81.5 million gives us that value of net national product, NNP, which answers the B part of the question. The C part of the question clearly asked us the national income. The national income simply means the factor cost income, the incomes accrued or accruing to the factors of production. So how do we get that? We convert from market price to factor cost. We already have 81.5 million as our NNP, which is net national product. So from our net national product, we will take the step of lessen indirect taxes, indirect business taxes, and adding our subsidies. Less indirect business taxes and add our subsidies. So C, which is our national income, which is same abbreviated as NI. So our national income is simply giving us NNP. Based on if we are working with NNP, we can work with any other. NNP minus indirect taxes and say plus subsidies. minus indirect taxes plus subsidies. So our NNP value as we have is 81.5 million. 81.5 million minus our indirect tax value, our indirect tax value, our indirect tax value, our indirect tax value according to our equation. Indirect business tax gave us 10.2 million. 10.2 million plus our subsidies. Our subsidies is 2 million. 2 million. So we'll have this 81.5 million, which is our NNP, minus our indirect business taxes plus subsidies. So it gives us a total of 81.5 million minus 10.2 million plus 2 million, which gives us 73.3 million. So 73.3 million. 73.3 million. So 73.3 million becomes our value for national income. Value for national income. And will go straight ahead to the requirement 4. Go straight ahead to the requirement 4. Requirement 4 and our requirement 5. Requirement 4 and our requirement 5. Our requirement 4 is personal income PI. So we have D to be personal income. Personal income is known as what? PI. Personal income PI. Our personal income simply will work with our national income. We'll work with our national income. NI. National income minus our company tax. Company tax. National income minus our company tax minus our social security contribution. Social security contribution, or we say social insurance contribution from our equation. Social insurance contribution, or we still say social security contribution. Then we equally have minus our undistributed profit, minus undistributed profit. Then we'll add transfer payment. So this will give us our personal income, our national income less our company tax, because company tax has no effect. It doesn't add up to individual's income. We less our company tax, we less our social insurance contribution or social security contribution, because it doesn't add to our personal income. We less our undistributed profits, because those profits that we are not distributed by companies does not add to personal income. Then we'll add up our transfer payments such as pensions. Those payments add up to our personal income. So you add the transfer payment. So we'll work out that we'll have our personal income PI is equal to personal income PI, which is our national income is 73.3 based on our computation. We'll less based on our formula. We'll less company tax, which is 1.1 million. We'll less social insurance contribution. We have 3.5 million. We equally less undistributed profit. We have 2.6 million. Then we'll add our transfer payment. add that transfer payment, which is one transfer payment, which is 2.4 million. 2.4 million. So our personal income PI thus gives us 73.3 million, which is our national income minus our company tax 1.1 million minus my social insurance contribution 3.5 million minus 2.6 million, which is our undistributed profit, then plus our transfer payment of 2.4 million gives us a total of 68.5 million naira. So 68.5 million. That is our personal income value. Then we'll proceed to the last requirement, which is our personal disposable income. Personal disposable income. Our personal disposable income, I can abbreviate to personal disposable income PDI. Personal disposable income is simply our personal income PI less our personal tax. Personal tax. So personal income less personal tax gives us personal disposable income. So our personal disposable income is equal to our personal income, which is 68.5 million, as we have computed, 68.5 million, minus our personal tax of 1.5 million. So that gives us 67 million. It gives us 67 million as our personal disposable income. And now that ends the solution to equation. As I said before, this question was gotten from the practice question in Atwa Economics for Ican Atwa program, from their practice question on national income. That's where we got this question from. And I hope this video helps out many who would be asking questions for clarity's sake on national income computation. I hope if it comes across you, I hope it was useful to you. Please remember to subscribe to the channel for more on performance management, for more on economics, for more on finance, and also click on the notification icon, the bell, so that you'll be notified when more videos are posted. Thank you very much for your time.